Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Welcome back. This is Friday, the 21st of July. Hope everybody's having a great trading week. So I do have that options class I've been promoting. Actually, we finished up some options trades this week, taking advantage of some of the earnings and the inflated volatility. We actually closed out some COF credit spreads, which worked out beautifully. Not all the members got filled. We it was kind of a hit and miss, but we did have a few members fill on that and took the whole credit at the end of the day today. That was with earnings coming out yesterday. I'll show you the chart in a minute. So let's get into, so again, if you're interested in learning some how to take advantage of that, one thing I've noticed, just a real commentary for those of you that do options and trade credit spreads. What I find interesting is that most people that do credit spreads take in, like 20 cents and risk $1. So it's like a negative RR. The way I teach credit spreads is I will not do them unless I get 1.5 RR, 1.5x. And you only get that in front of some impending news because of the inflated premiums and so forth. So if you are interested in learning something like that, if you've had what I typically find with credit spreads is you go along, doing a bunch of them, and then one of them hits you, and then you give back pretty much 4 or 5 of the credits that you took in because you're taking too small of a credit against the risk that you're taking. So if you want to learn something like that, click the link below. I think it's a great value for what I'm charging for that class compared to other classes. So in any event, if you're interested, it's coming up next Tuesday. You don't have to attend live and so forth. So, okay. All right, let's get into the, also, hit the subscribe button, hit the thumbs up. Leave me some commentary. If you have any questions, by the way, too, you can contact me at support@transparenttrading-solutions.com. I think the links are below. So if you have any questions or you want me to cover something here, now that I'm just doing the recordings and some visuals, let's get right into the charts. We have a very interesting week coming up next week. We've got clearly one of the most impactful Fed meetings coming up here with a 1/4 point rate hike already baked in the cake. That's Wednesday. Have a slew of earnings, which is great for our options trading. We have the core PCE on Friday, which is, one of the big inflation markers that the Fed looks at. We also have Microsoft, Meta, and Alphabet earning, which are the mega caps. We also have ECB on Thursday. So, man, we have all kinds of stuff, which is really great. For hopefully volatility is going to start kicking in and present some opportunities. Either way, again, the options market has been great lately with all the earnings and so forth, but you got to know what you're doing, or else you're going to, as like anything else, if you come into something and you don't know what you're doing, you're going to get hurt in either event. So really great week coming up. I'll be in here on Tuesday again. I'll put a recording out. So all right, let's go ahead and get started. So let me share my screen and we'll get into the charts here. S&P, you guys should be able to see. Okay, so we've got the S&P. The S&P, in fact, we are coming in short. We shorted the S&P at TTS. We shorted the S&P at 45.9950. So as we come into the end of the week and into the Fed meeting next week, we are short coming into the market. This is a daily distribution level. If you look at your daily chart, you can see that the rationale behind it. There it is right there. So that's the short. We also, interestingly, just a little bit of a side note here, I watch sentiment, which is how people are positioned. I don't know if you guys follow the AAII numbers, which is the American Association of Individual Investors. They put out their reading every Thursday, And this latest reading here as of yesterday was the highest in 2 years. The last time we had this kind of reading was back in January of 2020, and we know what happened after that. So it's interesting that everybody now all of a sudden is turning bullish after this thing's run up almost 22, 23%. NASDAQ's up like 33% off the bottom and so forth. So you got to be careful here. So we're short. We have a target somewhere along down in here along this breakout point. So we have a big target. We're not day traders at PTS. We're swing traders. We're always going for the bigger moves. Whether we get it or not, obviously, is a different, is a different question. We do have some levels, that these are not really great levels, but we could hold here. We could get another bounce off of these two areas there. I ultimately think we probably come all the way back to somewhere along here where we broke out from in the S&P. Okay. That would actually give us about a 5% correction, and then keep this rally going. So that is a possibility here. We'll see how that goes. We have our targets somewhere down along here. Okay. NASDAQ, as we know, Tesla got hit. I mentioned Tesla in our last video. We'll talk about that in a minute. We did peak out here, and then actually what really spurred the drop was the Tesla and Netflix sell off, and then came along TSM, the semis, TSM. In fact, we were in some puts in TSM. We got out of those, but we actually didn't make a lot of money because the thing didn't move entirely enough to cover the premium. So that wasn't a big deal. Even with we needed about 7 or 8 point movement on that top stock, and it only moved like 5 or 6. So we actually didn't do we didn't make any money on that situation. But we did make money on the credit spreads that we did this week. Okay. Again, similar to the, again, if this is the beginning of much bigger correction, we probably, I would say, we probably drop down to this gap if this is the bigger correction. If it's kind of a garden variety type of correction, then we probably, just come down to here about the 15K level, and then rally back up. We're within earshot of an all-time high. So still obviously very bullish. We are getting very extended, so wouldn't shock me if we have a pretty sizable pullback down to here, which wouldn't be out of the realm of possibilities. Obviously, everything is possible now that things are kind of cooling off. And then next week with Microsoft and all these mega caps, three mega caps reporting next week. That's also going to be interesting how they do. We saw what happened with Tesla this week. So is that a precursor to next week? Going to be interesting, right? So we'll see how that goes. But we will be looking more in the options play, and then I'm really not interested in the NASDAQ until we probably come down into this gap, because I do believe if this is a pretty sizable correction, just like here, we look pretty strong and then sold out pretty hard. So, but again, I'm not saying that this run is over. I'm just saying you got to be very, very cautious right now. And again, as I mentioned often, is even when you see these kind of moves here, you can't try to buy the shallow pullbacks. You got to wait for some of these deeper pullbacks, especially when you've come up this far. This is when you typically, like that run there, you saw nothing worked. No pullbacks worked until you got way down to here in that particular, and this was a very strong uptrend, by the way. So you got to be very careful. Okay. On the Dow, not a lot going on there. It's actually, finally starting to catch up, broke out, but we're still right up against this high. And again, it's only 30 stocks. I don't really pay that much attention to the Dow, to be honest with you. Russell kind of just died out again, right at the obvious levels. We talked about this, the 2K level last week, came right up to there, trying to pull back a little bit. We'll see if that goes anywhere. Bonds also very quiet this week. We had the big movement in the bond market the week prior, but clearly that's going to change as we go into the Fed meeting. So I do expect a lot of volatility coming into the bond market and interest rates. So not a lot to go over on the bond market today. Dollars also will have a huge impact, will be impacted next week with ECB on Thursday, and then with the Fed meeting and so forth. So we expect a lot of volatility in the currencies next week. We have this big bounce, which again goes back to what I just got done talking about, where conventional analysis will get everybody very bearish here. Now we've got this pullback. How far is this going to pull back? If we overtake this right there, remember I talked about this right here being the breakout point, mean reversion right up to about 101. If we overtake that, I wouldn't be shocked if the dollar pulls back all the way up to 103. So watch that next week. Obviously, with the Fed meeting, we're going to have a lot of volatility, and then the ECB adding to that on Thursday. So towards the latter part of next week, we're going to have a ton of volatility in the dollar. And this obviously in turn is impacting all the currencies to some degree or another. You can see the euro coming off here, the pound also coming off. The yen, by the way, Bank of Japan is coming out on Thursday night. That will also impact will clearly have an impact on the yen. There are a few levels on the yen that look somewhat interesting. If you look here, I'm actually looking more down to this area here. It could hold right at this level right there, but I think ultimately the yen goes down into these areas down in here at the 60. I've been talking about this level for a while. 68, 89, 69 yen level on the futures market. If you guys are trading the FX, this is the inverse, right? This is dollar yen. On the FX, you guys trade yen dollar, so it's actually the inverse of this. So these are some levels here. Again, we were trying to short up here, never came up. In fact, it came even a little bit shy of that. This whole area was actually, we had a short TTS here, which clearly we missed by a little bit, and then the thing dropped off. So it is what it is. We'll see if next week is going to be interesting on the yen. All the rest of the currencies, really not a lot. The Swissy pulling back a little bit as the dollar gains. We came right up to resistance on Aussie, kind of a tested area, kind of a rally-based drop kind of level here, pulling back. Really not interested in any buys on the Aussie until we get much lower. We'll see how that goes. And then the New Zealand, similarly. Looks like we're going to form a big range here in some of these currencies, especially the calm dolls, New Zealand, Australia. You can see that. Probably would look to these areas here. Now that clip that high, again, this is just a support area. Really tough to trade off of the support levels because you can't gauge the stops. That's a little bit tricky. So that high, and then it actually clipped it. Unless you had a really wider stop, I guess you'd have been okay with this. But no level per se, just kind of a resistance that got taken out, and then as the dollar rallied, then we're coming back down. So I would assume we're going to probably go into some range trading as well. Canada, not a lot going on there. Nothing really to talk about. The peso kind of meandering about. There's some levels here on the peso. Probably not interested in any buys till we get down into this 56.50. And we do have a level up here at 60 I've been talking about, but you can see the back and forth. Still obviously a very bullish pattern here. So it's going to be interesting. If it holds here, then it probably goes up there. But if I suspect if we have a strong dollar move next week, we're probably going to trade that all the way down to these areas here around the 56 and all the way down in here. Okay. On the silver, it's coming off a little bit as the dollar strengthening, similar with gold and copper and everything else. So not a lot to talk about. Oil looks like it wants to break out above 77. I think that actually may be setting up for a nice breakout situation coming up here. If you're not in oil, again, breakouts are very, very tricky, but we've already come up here, pulled back. We're kind of holding at higher levels every pullback, so that's adjustment that maybe this breaks out. We're going to need some catalyst, and then we really don't have anything until up about the 80-81 level to short against. So oil is interesting, and nat gas started perking up again. Many false moves on nat gas. And again, we had the inventory numbers. There was a rally. Bottom line with nat gas is until it breaks above 3, it's all going to be chop. You could trade. Obviously, there's some play in here, but not enough to. Unless you're pretty nimble and want to trade back and forth in here. Also, lots of volatility in the grain markets. I've been talking about the grain markets. Soybeans has had some really big swings as we come into the summer. We're coming into some levels up top, but not anything great on this chart. You can see we're basically just up against big resistance areas on the soybeans, and with the weather being warm and so forth, I think there's going to be, and then going into the fall, I think we're going to have lots more volatility. Wheat has been having all kind of moves, big swings back and forth with the Russia. I think there was the Russia grain deal fell. That was what spurred that rally. Then it failed. Then they were talking that they wouldn't go. So a lot of the news out of Russia and Ukraine is driving a lot of the price of wheat. So you got to be very careful, again, not to trade the middle part of these moves. You got to go out to the extremes. It's great moves, but you got to catch the extremes. You can't trade in the middle part of these moves because you're going to get hurt if you do that. Similar with corn. Corn is also starting to get some movement here on this thing. But again, just back and forth kind of thing. That pretty much covers the markets, everybody, on the future side. Let's get into, Tesla, obviously very involved in that. We talked about this level up here. The last time we were, I put out a video right up here. We came within very close to 300. And then the earnings came out. Along with the markets, this is kind of tracking the NASDAQ. This is a minor support. Obviously, there's a gap, but that gap's already been filled on Tesla. And you see, we already came through that, actually traded all the way down to 255 today. The next area is going to be this gap all the way down to 230. Wouldn't shock me in the least if we had Tesla coming all the way down to 235 or so. So that's going to be a possible opportunity for everybody on that as well. Other stocks, we were in JPM. I think I've mentioned COF we did today. We did into the earnings. And this is exactly the type of situation where you have inflated premiums going into the earnings. The earnings were last night. And then you have this, and then you just let the options expire worthless, going into some credit spreads. You can't get those 1.5x's unless you get those inflated premiums, by the way. Typically, just a normal day-to-day. By the way, the implied volatilities on these options was pretty low. But what happens with the earnings is they inflate them, and then that's where you take advantage. Where a stock does nothing, these type of stocks like COF or we've been doing like FedEx, those kind of big stocks that really don't move a lot. those are great to do this, especially with 1 or 2 days left in the options in front of earnings. That's the kind of stuff I'll be teaching in Tuesday's class. Another stock that we've been looking at in regards to options is Coinbase. I think I mentioned that the other day. This is an extremely volatile stock. It came right up to the 115. It actually is consolidating here, so I suspect we're going to get a big move in this thing starting next week. We've got support around 80. If we break out above that, there's a lot of room to the upside, and this thing, swings about $8, $9, $10 a day. So it's great for those of you that want to look at some options play right here at Coinbase. So just a couple of things outside of the futures market, and then generally, I have a whole list of stocks that we go through at in our mornings meetings, morning sessions every day. Okay. All right. So to wrap things up, everybody, again, sign up for the newsletter if you're interested in learning some of the options strategies we've been doing. Knock on wood, out of the credit spreads that we've been doing for the last couple of months, we've actually not had a losing trade yet, and I can't, obviously that's not going to continue. So can't say that. Got to say that with tongue in cheek, right? We do lose money, obviously, with some of the other the directional ones is where you end up losing money. So we've lost some money on the directionals for sure. But you got to do them in the proper stocks, and earnings are great to do those in. Other than that, tomorrow again, obviously next week's going to be really interesting. See if the S&P actually catches some traction to the downside, or the buy the dip comes back in. But it will be interesting. So I will be back with you on Tuesday. Again, if you have any questions, if you want to sign up for the newsletter, if you're interested in the class, it is coming up on Tuesday. There's some links below. If you want to contact me, again, contact me at support at Transparent Trading Solution with any questions. Put some comments down at the in the comment window, and have a great weekend, and I'll talk to you on Tuesday. Take care.